All right, hello everybody. Let me quickly grab a bottle of water for this stream, so I don't have to get away anymore during this stream. And in the meantime, people can join the stream; they can pile in, and yeah, we will have an epic one today because yeah, we are about to get this event, and I think it will be very good for the long-term development for crypto. More about that later. Let me quickly grab some water. So there we go. There we go. I'm ready. I'm ready for today. Um guys, let me know where are you coming from in the live chat, okay? I'll have a look into the live chat now. Let me know who is here and where are you coming from. That's interesting to know. I want to know who is in the live chat today. Again, who are the familiar faces? Who are the familiar people that are always here? I can already see MA. Welcome to the stream. Definitely very familiar. Max, welcome to the stream. Special, welcome to the stream. Sunny Boy, Mags. Let's go. Michael as well as Adam. Let's go. Ben's from Germany. Ryan from Iran. South Africa, Barry. Nice to see you guys again. Netherlands, Poland, Michael. Tomac also from Poland. Ben's Deutschland. Indonesia, very nice. Germany against Cyprus. Nice to have you guys in here. Bali as well. We have Bali. And Saudi Arabia. Let's go, yo. Welcome to the stream, Max. Ireland, Sunny Boy, Philippines. Via the USA. Are you right now traveling to the USA? That's pretty interesting. Norway, Thailand, but you're Swedish. Oh, nice. Also traveling to Thailand. From Pakistan. Guys, nice to have you all guys in here. Definitely, I'll briefly tell you what will happen today, what will happen over here, and what do I think will happen next. And after that, we will go over a quick market update. And then after that, maybe answer some questions. And then we can have a look into the live event. The live event will happen in 26 minutes time. It will happen at 5 p.m. UTC plus 4, so that is Dubai time. It will happen at 3 p.m. UTC plus 2, so that's Central European time. So yeah, these are the time zones. If you want to get your time zone, well, then go to tradingeconomics.com/calendar and go to your time zone over here, UTC plus 4 for me. Scroll down, and over here you will see the Fat Waller speech. Okay, this is the speech that we will go over today. This will happen at 5 p.m. There's another Fat Waller speech. I'm not sure what that is. Let me check up on that right now, because it is not the speech that we will talk about today. 9 a.m. ET to UTC plus 4. 9 2. Let's go. Yeah, so this is the correct one we are having, but I'm not sure what this event over here is. Maybe you guys know it. So let me know in the live chat if you know what this event will be. It's also a Fat Waller speech, but this Fat Waller speech over here at 5 p.m. So that is in 24 minutes time. This is the important one we will be having a look into regarding Payments Innovation Conference. And I mean, I looked it up, what will be discussed. Mostly what will be discussed is basically the crypto payments, and mostly about stablecoins, and mostly discussion about really developments after the Genius Act that we of course did have. So this will be a very bullish development for crypto in the long term, okay? It will mainly focus on Bitcoin and crypto payments, mainly about stable coins, mainly after the fact that we have got this ingenious act. So yeah, the Fed will host its Payment Innovation Conference right now in 30 minutes. Right now it is 24 minutes time. So definitely, crypto is going fully mainstream. Definitely, 100%. I mean, it's unheard of a few years ago that the Fed was hosting these type of events, right? This is absolutely great. Absolutely. I mean, it's very good that these things are happening for the long-term adoption, the mainstream adoption, and the mainstream innovation of crypto. And that's good for the entire space. We want these things to happen. Some people say, oh, yeah, I don't want these things to happen. I just want Bitcoin to be this decentralized asset and not controllable by the government. I don't want the government to interact. I don't want the government to... I just want the government to disregard crypto. But I don't think that that is a smart and wise approach. If you are an investor in crypto, yeah, I think if you're really embracing only the like if you want crypto really only to be decentralized, etc., and you're all for that, and you want to be against the government, etc., then okay, yeah, I get it. You would be against all of these events, and you would be against these adoption and innovations that are going on right now. But if you are for, I mean, mainstream adoption, if you are for that crypto will be adopted by the entire world at a later stage and the prices will go up, well, then these events that will happen right now are very, very good, very bullish. What I will say, though, is that I do not think that this will be particularly bullish for the short term. I do not think that we're going to be seeing any massive price increases now, okay? I do think that for most of you guys watching, for the short term, it will be a bit of a nothing burger, but I always say it's good. I could be very wrong, because during these types of events, something very bullish could be said. It could be very possible, okay? And then most likely it will be regarding the stablecoins, and then because of the stablecoins, maybe it's going to be about Ethereum, maybe about an L1, maybe about a crypto, maybe something like that. I don't really think, like, some people have been speculating maybe a Bitcoin treasury or something like that. We can even ask Grok later to ask him, could a Bitcoin treasury be discussed over here? I don't think so at all. I don't think so at all. But some people have been saying, oh yeah, this might be a rumor. I don't think it's true. But one thing is going to be for certain, we could be up for any big surprises. And if we are going to be up for any big surprises, we could see a big rally. I don't think so. I think we're just going to consolidate sideways. Eventually, we are going to see a big pump again to the upside, right? But I don't think that it needs to be necessarily happening during this event today. That is one thing that I will say. That is, with that out of the way, I mean, I just needed to say that, right? But we will have a look into the event, and maybe we are up for a great surprise. Let me have a look into the chat, what you guys are saying, what you guys are thinking. Will happen as well. I just want to dump all my crypto and buy a new wife. I don't care about decentralization. I think most people are in the same boat. Not necessarily about buying a new wife, but definitely most people want to sell their cryptos at a higher price. So yeah, they have more money, right? That's most people their end goal. Now, my end goal, right? In the short term, of course, I want to accumulate more dollars. But in the long term, my end goal is honestly just to accumulate more Bitcoin. That is really my end goal. I want to accumulate as many Bitcoin as possible. I want to feel as safe as possible in my life, right? And I want to enjoy my life as much as possible. These are my goals. And yeah, in the short term, of course, you need more dollars to buy more Bitcoin, of course. But long term, it's all about accumulating more Bitcoin, in my personal opinion. Stable coins are a horse in a stable doesn't go by a wife. In what African country you live? I mean, it's a saying, man, in crypto. It's a saying. Buy me a new one while you at it. We want crypto, buy new. Oh my god, everybody is now talking about buying new wives. I can also see so far the Genius Act was shit. I mean, yes and no. It wasn't really shit in my opinion, because the Genius Act definitely did cause for this massive Ethereum rally, right? It definitely, like, potentially you could say insiders here and then boom, the real rally here. And I mean, it wasn't shit at all. I mean, for me, the Genius Act wasn't shit at all. Mm. Also, by the way, during this conference, some big players will be joining the conference. Jerome Powell itself will not, but a lot of executives from, for example, Coinbase or these. Let me actually load it up. Okay, let me load it up. So have this one. What will happen today? Let me search it up, guys, for you, so I can give you a clear, good answer about the exact names that will be joining today. Where's the page? Where is that page? Oh, it's over here. We've got this one, the Payments Innovation Conference. Wow, will it take this long for today? I'm not sure. I'm not quite sure. Is this the timeline for the entire day? Because in that case, only like we will have a talk at 9:20, so that will then be in 40 minutes time, give or take. 37 minutes time. But I think that will be the bigger talk. Bridging traditional finance with the digital asset ecosystem. And I think that's going to be an important one with the co-founder and CEO of Chainlink, and also CEO of Lead Bank, CEO of Fireblocks, and that's pretty much it. But then we also have the CEO of Paxos later today. I'm not sure. Maybe yes or no. I'll be still going live until this stage over here. Also, the CEO of Fifth Third Bank, CEO of Dollar App, and the president of Circle. So that's a pretty big name over here at 10:50 a.m. ET Eastern Time. And then you have all. So this is stablecoin use cases, by the way. So that's pretty like good bullish topic for crypto. And then we have all-in payments. And here we do indeed have CEO of ARK Invest, Cathy Wood. We have CFO of Coinbase, and we have the head of AI of Stripe. And I think, and also head of strategy Web3 Google Cloud. So I think this will be a pretty good topic. It's AI in payments. Okay, tokenized products also pretty bullish. It's with the COO of BlackRock, but this will be at 2:30 p.m. ET and 2:30 p.m. ET to Dubai time. That will be at 10:30 p.m. Dubai time. So I'll not be going live during this. But that was this other event. This was the it's not even. It's not even. I'm not sure, but I think after that the closing remarks by Jay Waller, and that is the end speech of Fed Jay Waller. Okay, but I think this might be even the most important topic that will be discussed today. But also bridging traditional finance with the digital assets ecosystem. I mean, it's also pretty important. However, the names are not as big in my opinion. But the CEO of Chainlink will discuss this. So that's pretty interesting. Let's see, what is the Chainlink price doing now? If we open it up over on weeks and go to Chainlink. Let me ask, what will be the most important topic for today for crypto. There we go. Chainlink, it is pumping a bit now. It's pumping a bit now. So, I mean, market is anticipating that. But also Ethereum is bouncing back slightly. Okay, so yeah. Oh, yeah. So, if I ask Grok, what's the most important topic for today, for this event? He indeed says, where was it here? Connecting traditional finance and digital assets. So, yeah. This indeed, what we are about to watch now in 13 minutes, this indeed will be most important event we will be having a look into. But in my opinion, this will also be pretty important. However, yeah, tokenized products, I mean, they're probably just going to say what they've already said. I mean, we already know that BlackRock is bullish on tokenized products. We already know that Franklin Templeton and these big institutions, big funds are very bullish on tokenized products, right? We already know that. So maybe that's the reason why it will not be as volatile. Also, by the way, moderator is from Jito Labs. It's pretty interesting, in my opinion, that all of these things, I mean, all of these members from crypto, they're all joining in this conference, this space. That's very interesting, in my opinion. It is for stablecoins. Will it be good for Bitcoin? I mean, not particularly this event here, because, for example, bridging traditional finance with the digital asset ecosystem, I mean, Bitcoin is more kind of seen as a store of value now, as an investment for the long term, right? It's more Ethereum, which is seen as a digital asset ecosystem. And during this stage here, I mean, it will be talked about where it's going to be bridging the traditional finance with this digital asset ecosystem. So it's not that much about Bitcoin, more about Ethereum. And we are pretty well positioned for that if Ethereum will see a nice bounce. I mean, I'm still sitting in this long position, which I've been opening up during this dump right over here. I mean, my average entry is sitting at around this level we're currently trading at, a little bit below. So I'm in a little bit of a profit. Yesterday, I was more in a profit. But I have been saying I've been doing this like a little bit of an emergency chill stream of half an hour long yesterday. And I was talking about the fact how, I was thinking we could see a bit of a rejection. I was contemplating whether I should take a little bit of profit, maybe set my stop loss in profit, but I didn't. I just kept my trade open, and we're still in a profit, but I'm still all good. I still do think that we're gonna recover this. Worst case scenario, we could go to the range lows again for Ethereum, and maybe like 3.7, right? 3.7 maybe. But in that case, I do think I will place another order down to accumulate even lower, and then I do think that we're going to be tagging the upper side of the range again after that. Anyways, by the way, I do quickly want to be saying for all of you guys watching, if you're interested in trading, make sure to check out that second link down below, because you can still claim some amazing, very, very big deposit bonuses over on Weeks. And that is definitely very valuable to check out. Also, there's a 25% trading fee discount. And also, you can join my Platinum group, which is free to join. And over here, I share everything in real time regarding my trading updates, what I think about the market, and more extra alpha. And also, I haven't shared this anywhere else. You're the first one to know. By the way, I'll quickly share this link in the chat over here, so people from my Platinum group can also see this alpha. But also, what I'll make is I'll make probably another channel, and I'll work together with Weeks to give back a lot of money based on your trading volume. Okay, so there will be like another channel, and there will be a claim portal, and you can get a lot of cash back You can get a lot of money back by just trading over on weeks. Okay, it's that simple. I'll be developing that right now, so that will be absolutely crazy. You can earn like lots of money, especially if you're a high volume trader. Because mind you, first of all, we are already having pretty low fees over on weeks, and on top of that, you'll be earning a lot of cashbacks. No other exchange is doing this. No other group is doing this. No other person is doing this. I mean, this is an idea I got on my own, and I'll be probably running with that. I still need to think about it fully all the way through. But if you already join, then you can join the Platinum group and also benefit from these rewards. And also, I've been thinking about maybe making it paid later. And right now, you can still join for free. So, anyways, let's do a brief market overview. Before then, in 8 minutes time, we can have a look into this conference that is going to be getting hosted. In 8 minutes, it will be starting. So then we will be having a look into it. Now, today, I've been making a video mostly talking and discussing about the comparison from gold and Bitcoin. And I think it's very interesting. Now, there seems to be a lot of euphoria and hype, etc. on X and YouTube about the comparison. However, for me, I mean, the video didn't perform very well. I mean, maybe my community isn't as bullish about the comparison as crypto in general. But I definitely do think there's a big point to be made where, first of all, why is this graph disappeared? Okay, well, just needs to reload. Okay. I definitely do see a case to be made that we haven't had our proper bull market yet. I mean, at least against the gold chart. Okay, against the gold chart. And that money rotation might still be getting started. Okay, because we can always see that first gold moves exponentially, then money flows into Bitcoin. Money flows into Bitcoin. Right now, we're seeing gold exponentially moving to the upside. After that, gold, this money might be flowing into Bitcoin. Could be happening again. Gold has some peaking out signals, but I mean, I do not really care about like lower time frames comparison and the lag, etc. People, once again, just like with the global liquidity, I mean, just with the global liquidity, people have been having a look into an exact day lag to exactly predict where Bitcoin was going to go in a shorter time frame, exactly to the dot. And I've been saying, sooner rather than later, you're going to get wrecked. Sooner rather than later, you are going to be getting invalidated and you're going to get wrecked. So I will just be using, just like with the global liquidity, just like with gold, I will just be using it as a general direction in the market. I do think the general direction in the market can be shifting to the upside again fairly soon. That is why I'm still bullish on Bitcoin. That is why I'm still bullish in crypto, as long as we're not going to be getting invalidated. Because yeah, I mean, the 4-year cycle theory, we're getting pretty close towards that top. It is definitely looking very dangerous. It is definitely looking very bad, okay? But it could be a case to be made that this cycle, it is indeed going to be different. That this cycle, indeed, we're just going to be following the big money. That this cycle, indeed, we're just going to be following the big funds with the ETFs we're having, with the huge institutions which are joining, we're having, etc., etc. There's definitely a case to be made that this cycle, we will just continue to the upside, especially with gold right now moving exponentially to the upside. So that is why I will still remain to be bullish on crypto as long as we're not really ultimately going to be confirming that we're entering a bear market. Okay, as long as we trade above the 50-day weekly moving average, I will still remain to be bullish on Bitcoin and then thus on crypto. So yeah, that has been my strategy. That has been what I've been explaining, right, in the last couple of weeks. And I mean, we've been running very well with that. We've been doing very well with that. So yeah, nothing to complain with that. On top of that, for Bitcoin, we might potentially start to have a look into a bit of a consolidation being made right over here. I do not like how it develops. I would still rather have a look into this sideways consolidation. Lower side of the range, I'm a buyer. Okay. Upper side of the range, I'll get skeptical again. I'll get worried. I'll have a look into, could this potentially be another rejection again? Okay, that is my game plan right now for the coming few days. It's very easy to range trade this range over here. On top of that, I'm still 3 minutes time left until we're gonna have a look into the event. But also, I am still having a look into a potential like further consolidation here for Bitcoin, right? But eventually maybe a squeeze below the range and then have a look into the 50 weekly moving average and then a touch and then boom, go to the upside. I'm still having a look into that. So yeah, that's pretty much the alpha. Let's have a look. We still got 3 minutes left. So nice to have a look into. Let me load up some things right now. Also check some texts. Right. You all will all get liquidated. What is the Fed gonna talk about? Stablecoins? Yeah, so it will be multiple things, and it's not the Fed itself. The Fed is hosting this event. But first topic will be about bridging traditional finance with digital asset ecosystem, which Grok believes to be the most volatile and most important part. And then after that, we have stablecoin use cases and business models. I mean, this will be the stablecoins part, right? Could be bullish on, for example, Ethereum. Could be bullish on Ethena, maybe, because Ethena has their own stablecoin, right? Then we have lunch, guys. We have lunch. No, but then we also have AI and payments. And I think the most important part, like the most bullish people that are joining, would be in AI and payments or tokenized products. But Grok believes that this is the most important part to watch. Okay, and we will be having a look into that now. It's starting in 1 minute, so we will be watching that now. Okay, load it up. There we go, and let's wait for that. Can start any moment now, and then we will have a look into the opening remarks. The opening remarks. Most of you sound bearish. I mean, yeah, indeed. I mean, I've been streaming for a long time, right? I've also been streaming during this phase here and during the entire rally up. Like most of the times, or like during this dip here, most of the times, whenever everybody is bearish in the chat, it's usually a good time to long. Yes, indeed. Very true. Chainlink, yeah. What is Chainlink doing now? Bouncing a bit. Let's see how Chainlink will be doing. I mean, the CEO of Chainlink will be during this event now that we will be having a look into. Also, Jito Labs. Jito, is this the Jito Labs of the Jito coin? Is this the same one? Is this the same one? I'm not sure. Oh, there we go. Let's watch it.
Events. So I'm very excited to have everyone and learn from all of you and your experiences. We're going to have 4 panels today covering key issues on payments innovation. They're going to cover things such as tokenization, AI and payments, stablecoins, and the use of digital assets in traditional finance. You can also expect to have plenty of time, just like this morning, to mingle and meet each other, folks you haven't met before in the industry, as well as Federal Reserve leaders. And speaking of Federal Reserve leaders, Few at the Fed are more focused on these issues than Chris Waller. He has long-standing interest in new technologies and innovations in payments. As an academic, he wrote extensively about monetary theory and its intersection in payments issues. He has studied Bitcoin's early potential as an alternative currency and stablecoins' impact as a like payment instrument. In 2021, as a new Federal Reserve governor, he gave a speech on CBDC called A Solution in Search of a Problem. It proved foundational in terms of the topic and the discussion of that topic. Governor Waller is chairman of the Fed's Payments Committee and has given many speeches about payments, stablecoins, and DeFi. And now it is my pleasure to introduce Governor Chris Waller.
Good morning. All right. Well, thank you, Susan, and good morning to everyone. It's my pleasure to welcome you to the Federal Reserve Board for our first Payments Innovation Conference. My objective in creating this conference is twofold. First, I wanted to have a conference that focused on the new technologies that had come from the DeFi and crypto worlds and how they are entering into the mainstream payments ecosystem. My goal is to have a vibrant discussion about payments between traditional payment incumbents and the new entrants from the DeFi world. Second, I wanted to send a message that this is a new era for the Federal Reserve in payments. The DeFi industry is not viewed with suspicion or scorn. Rather, today, you are welcome to the conversation on the future of payments in the United States and on our home field, something that would have been unimaginable a few years ago. My view for the Fed from now on is embrace the disruption, don't avoid it. As you know, we are well into a technology-driven revolution in payments, and I'm here to say that the Federal Reserve intends to be an active part of that revolution. A number of technological advances are transforming the payment system. Stablecoins and tokenized assets, making use of distributed ledger technology. The rapid adoption of artificial intelligence AI, and increasingly the convergence between these innovations and the traditional financial ecosystem. This includes the institutions and infrastructure that our economy has long depended on to operate a safe and efficient payment system. And yes, this also includes the Federal Reserve. The revolution in transforming payments is demanding change everywhere. And I will say more in a moment about some new ideas that the Federal Reserve is studying to support those innovations. I have spoken before of what I see as the two broad models of payments innovation in our market economy. The first is private sector-driven innovation. Most innovation comes from the private sector, which is motivated and best positioned to allocate resources and take risk with new technologies. The second model is when public sector entities, such as the Fed, build platforms and provide services that enable the private sector to more readily and rapidly expand new services to its customers. This should be done rarely and in limited circumstances where it addresses a specific market need. The posture of public institutions, including the Federal Reserve, should be to acknowledge and embrace private sector innovation that can improve the payment system while preserving its safety and stability, which are as essential to the new generation of innovators as they are to legacy institutions. Now let me pull back a moment and remind everyone how we got here. Since nearly its founding, the Federal Reserve System has worked to facilitate payment and settlement system efficiency alongside the private sector. From the beginning, the clearing services provided by the reserve banks obviated the need for daily movements of cash in armored cars with heavily armed guards. Long before we started speaking of the payment rails that are facilitating the kind of innovation we're discussing today, the Fed was running trains on steel rails to deliver and clear paper checks traveling across the country. FedWire began conducting interbank transfers through telegraph wires in the early 20th century. Fast forward today, where we have multiple infrastructures that settle interbank transfers in real time. Today's conference will focus on private sector-driven innovation. We have assembled 100 private sector innovators who are leveraging cutting-edge technology to create new possibilities in the payments landscape. Our panelists are engaging in integrating traditional financial payment rails with distributed ledgers, developing new products and services in the digital asset ecosystem, and leveraging AI in the payment system. It's worth noting that the firms engaged in these activities include banks, asset managers, retail payment firms, technology companies, as well as crypto-native fintechs. This is an acknowledgement that distributed ledgers and crypto assets are no longer on the fringes, but are increasingly woven into the fabric of the payment and financial system. Now, before we hear from these innovators, I would like to touch on roles that the Federal Reserve plays to support the private sector. These include serving as a convener to solve coordination problems and operating core payment and settlement infrastructure. We are also looking ahead, conducting hands-on research on tokenization, using smart contracts, and the intersection of AI and payments for use in our own payment systems. We do this to understand the innovation happening within the payment system, as well as to evaluate whether these technologies could provide opportunities to upgrade our own payment infrastructures and to enable us to have deeper conversations with the industry on these new technologies. While this is a good start, I believe we can and should do more to support those actively transforming the payment system. To that end, I have asked Federal Reserve staff to explore the idea of what I'm calling a payment account. Today, Federal Reserve banks provide access to master accounts and financial services to legally eligible entities following our guidelines for evaluating account and services requests. The payment account would be available to all institutions that are legally eligible for an account and would be beneficial for those focused primarily on payment innovations. This payment account concept would be targeted to provide basic Federal Reserve payment services to legally eligible institutions that right now conduct payment services primarily through a third-party bank that has a full-fledged master account. There are many eligible firms engaged in substantial payments activities that may not want or need all the bells and whistles of a full-fledged master account, or access to the full suite of Federal Reserve financial services to successfully innovate and provide services to their customers. The idea is to tailor the services of these new accounts to the needs of these firms and risks they present to the Federal Reserve banks and the payment system. Accordingly, and importantly, these lower risk payment accounts would have a streamlined timeline for review. Payment innovation moves fast and the Federal Reserve needs to keep up. To be more concrete, let me describe a possible prototype that I've been considering for this type of payment account, or as I sometimes call it, a skinny master account. The account would provide access to the Federal Reserve payment rails while controlling for various risks to the Federal Reserve and the payment system. To control the size of the accounts and associated impacts on the Fed's balance sheet, the Reserve banks would not pay interest on balances in a payment account, and balance caps may be imposed. These accounts would not have daylight overdraft privileges. If the balance in the account hits zero, payments will be rejected. They would not be eligible for discount window borrowing or have access to all Federal Reserve payment services for which the Reserve banks cannot control the risk of daylight overdrafts. Now, I want to be clear that this is just a prototype idea to provide some clarity on how things could change. The upshot is that, in my view, the payments landscape, as well as the types of providers, has evolved dramatically in recent years, and accordingly, a new payments account would better reflect this new reality. As Federal Reserve staff examine this idea, we will engage with all interested stakeholders to hear their perspectives on the benefits and drawbacks to this approach. So you will be hearing more about this shortly. So let me wrap up here so we can get to the really exciting part of the conference, not me blabbering, which is about innovation in the future of payments. So thank you to the panelists who took the time to participate, those in the audience who agreed to be here, and the many others watching online. And a special thanks to Fed staff who moved incredibly fast to pull this event together and fit it into a very busy fall schedule for the Fed. So on with the conference, and thank you for being here.
Thank you, Chris, for starting us off. So I'm going to introduce the first panelists to come on up while I give a few housekeeping items. All right, here they come. So as a reminder, Chris mentioned we are showing this online so that others that can't be here today can follow along with the exciting program that we have. We will also be using Slido. So when you came in, you should have received a folder. Within that folder, there is a QR code and link within it. We're going to ask that folks submit their questions for the panelists using Slido. And the question and answer window will be open throughout the whole panel to submit questions. You guys can come on up. Also, if you need Wi-Fi access right outside that door, there is a desk and someone can help set you up with that. And lastly, folks today who are wearing blue stripe on their name tags, you can ask them anything you might need and they will try to help with whatever you need. Okay, it looks like our panelists are getting set up. Okay. So our first panel will be bridging traditional finance with the digital asset ecosystem in their conversation. Our moderator is Rebecca Rettig, and she will be leading us through this first topic. Rebecca is the Chief Legal Officer at Jito Labs, a software company that builds critical blockchain infrastructure and DeFi applications for the Solana network. I will now turn it to Rebecca to start us off. Thank you.
Thanks so much.
For the Solana
Good morning.
network.
Thanks to everyone for being here. It's my privilege to kick off today's conference with a panel about the convergence of our traditional financial system with a new system called decentralized finance, or DeFi. Before we jump into substance, I want to thank Governor Waller, Sunaina, Alex, Ria, and everyone at the Fed for convening us to discuss the evolution of our payment system. This type of forward-thinking, collaborative event allows us to ensure a cutting-edge and safe financial system and to ensure that the U.S. economy remains competitive. Starting the day with a DeFi panel is brave. It shows a willingness to engage with one of the thorniest questions on innovation: whether and how traditional financial institutions and traditional financial services will and can evolve with the advent of an intermediary-less technological system. Although there's not a universal definition of DeFi, in fact, regulators, policymakers, and industry cannot agree on one, I'll provide a brief definition for purposes of today's panel. DeFi is a software system that runs on permissionless blockchains and allows individuals and institutions to engage in economic transactions without an intermediary. There's been a lot of talk over the years about whether this new intermediary-less system can or will disrupt or replace TradFi. Very recently, ICE Chairman Jeff Sprecher spoke of his rationale for a recent investment in and partnership with a company building a widely used DeFi application called Polymarket. Mr. Sprecher said that ICE made the investment so, quote, "we don't get disintermediated." Two important things on this. First, unless you're really in the crypto industry, you're unlikely to even know that Polymarket is DeFi or even that it's built on a blockchain. Second, as of today, the total value locked in all DeFi applications comprises about 4% of the total crypto market and significantly less than 1% of GDP. In other words, there's an acknowledgement that DeFi has great potential to bring new disruptive features to traditional payments and financial services, but there is also a very long road to go. This road is paved with new technology. To that end, today we'll discuss the current state of DeFi technology, whether and how TradFi can use and integrate with it, and where we'll go in the future. This panel will also tackle the incredibly important questions relating to stablecoins' critical role in the DeFi ecosystem and examine tokenized deposits, as well as DeFi's potential future role in bank liquidity provisioning and liquidity services. The DeFi TradFi disruption question is unlikely to have a singular answer, and instead will, as the title of this panel notes, require bridges. Governor Waller said it well in his recent remarks at CBOS on the next frontier of payment innovation. He said, innovation is not an issue of TradFi versus DeFi, but rather poses an opportunity to harness the complementary strengths each has to offer, especially at a time where we are seeing increased convergence between the two. Today's panelists are at the forefront of this convergence, and I'm looking forward to facilitating the discussion among them and letting them introduce themselves now, and then we will jump into questions. Sergey, do you want to kick off?
Yeah, sure. Hi, everyone. Good to see many. Sorry. Hi, everyone. Good to see many of you again. Chainlink, on the topic of DeFi, powers approximately 70% of DeFi globally and over 85% of DeFi on top chains like Ethereum, providing data and other key services to make sure that the infrastructure underpinning the transactions and operations of DeFi are correctly executed. We also have a lot of experience working with stablecoins, powering their proper execution, basically. We're the largest provider of proof of reserves, which is the technology that stops over-minting events and incorrect minting of stablecoins, which I think will be particularly valuable this new stablecoin environment. We're also the most reliable provider of bridging technology for the capital markets, working with large organizations like SWIFT, the DTCC, JP Morgan, UBS, and others. So we cover the gamut of both powering the DeFi community and now well along into powering the capital markets transition into the, just like 5 different names. The digital asset, new revolutionary thing. So yeah, that's what we do.
Great. Jackie?
Hi, everyone. I'm Jackie Reeses. I'm the co-founder and CEO of Lead Bank. We have bank in our name because we own an FDIC-insured bank in Kansas City, Missouri. I started the company in 2022 after leaving Block, where I ran financial services, so all the regulated products there, and have also been involved with the Federal Reserve for 10 plus years. So I know a lot of the folks in this room, first through San Francisco. Lead is an infrastructure provider. We build infrastructure for fintech, crypto, consumer companies, and e-commerce companies, many of whom are the largest companies in the world, and all names that many of you know. We're an underlying infrastructure provider. We don't really have a consumer brand. And so as much as we power a lot of the products that you all interact with, you would only really see us show up through disclosures or through an announcement. And that might be Stripe. I know someone from Stripe is in the room. It might be Revolut. It might be Ramp. It might be Affirm. It might be Walmart. And so we work with a lot of different types of companies to provide their underlying infrastructure. I'm very happy to be here.
Thank you for having us. So my name is Michael Shalov. I'm the CEO and co-founder of Fireblocks. We provide infrastructure, digital asset infrastructure for financial institutions, basically a technology as a service. Our main customers are bank, fintechs, and other financial intermediaries that are involved in digital assets, stablecoins, and crypto. Been doing that for the last 7 years. We are servicing over 2,500 financial institutions today. And essentially the infrastructure has 2 components. One is basically what you will call wallet or custody infrastructure. So we help folks like Bank of New York Mellon and others to create the custody technology for them to store digital assets. We also have the Fireblocks network that helps people to coordinate the settlements over 100 blockchains that we support. So through this infrastructure this year, there will be more than $5 trillion worth of digital asset value that is going to be transferred. With regards to DeFi, among kind of the category of the different institutional wallets, custodians, and basically that broad category, we were the first one that created an offering back in 2020 to interact with various DeFi protocols. And along the way, we basically kind of were helping with the challenge that traditional financial institutions and regulated entities have in terms of accessing DeFi. So I think we have a lot of experience in discussing about the topic we're going to chat about today. Thank you.
Good morning, everyone. I'm Jennifer Barker. I lead two businesses for BNY. I lead the Treasury Services business, and I lead the Depository Receipts business. And first, I'd like to thank Governor Waller for bringing us here today and the rest of the Federal Reserve. This is a really important topic, and the discussion is timely. We are at a really unique and extraordinary juncture. We have breakthroughs in distributed ledgers, tokenized assets, artificial intelligence, all of which are reshaping the payments industry, not only here, but across the globe. And these technologies, they promise payments that are faster, more secure, and more inclusive than ever before. But traditional services and traditional service providers still provide scale and regulatory standards and expertise that underpins every transaction. So today's shift isn't about blockchain technology immediately replacing traditional systems. It's about the two coexisting, and that's really where true transformation lies, on getting those networks to interconnect. So our task is to unite these strengths as they complement one another. Layering digital asset innovation onto proven financial systems will unlock greater efficiency, liquidity, transparency, security, and financial inclusion. Key tenets here are important to resolving delivery around real-time payments, data-rich payments, and modernizing for resiliency, security, and industry collaboration. So success will depend on the close collaboration amongst all of us, banks, fintechs, service providers, regulators, to build clear standards, resilient infrastructure, and responsible risk frameworks. So at BNY, we are committed to innovating by investing deeply in research, modernizing our infrastructure, and championing clear, adaptable frameworks that encourage responsible innovation.
Okay, great. So now we'll jump into it. As you could hear from everybody's introductions, obviously infrastructure and the technology itself is really the critically important part. So we're going to really try to delve deep a little bit on the technology to start. And we're going to start with the question of interoperability, which means the ability for various computer and software systems to share data and make use of it across different systems. Sergey, we'll kick off with you, because obviously interoperability is key to what Chainlink has built. They've built the Cross-Chain Interoperability Protocol, or CCIP, which is software that allows users to provide information across various different blockchain networks, so Ethereum, Solana, and many others. But how is CCIP currently being used, and you alluded to this a little bit in your introduction, by traditional financial services firms who are integrating digital assets into their offerings?
Yeah, sure. So I can't seem to get that right.
I'm a full-service moderator.
I wouldn't last long at the Fed. I can't even get this right. Yeah, so there's like two dimensions to interoperability in the TradFi world because of the existing investment in systems. So the first level of interoperability is getting the existing systems to work with chains, the existing data sources, the existing backend systems, the existing messaging standards such as SWIFT. All of these existing systems need to become synchronized. And this is where you hear terms like digital twin and fund tokenization and other areas. So there's one level of problems where you have to synchronize existing data, existing backends, existing messaging standards with the chains, right, for basic operations. And our position is that those existing systems are not going to be going away. There's a huge investment in them. They're highly regulated. They meet legal requirements. They meet a lot of very key requirements. So the challenge there is synchronizing them. This is the work we've done with SWIFT, the DTCC, and other groups that power those systems in big ways. The second level of interoperability is the cross-chain level, and that's because you have a lot of fragmentation, and that's happening because the cost of generating a chain is becoming lower and lower. So as the cost of generating a chain is cheaper, and as it's easier and easier for more institutions to make chains, there will be more chains. Also, there's various fee dynamics and other benefits to having your own chain. And there's also more and more public chains as long as VCs can make money from flipping a public blockchain coin. So as long as VCs can fund a public blockchain coin, and as long as that public blockchain coin can return a large amount of capital to them as a result of their initial investment, you can expect more public chains as well, because that's a very attractive, financially attractive business model for many people. So there's more chains. More chains creates siloed capital. Siloed capital creates risk and creates limitations to market growth. So you need standards, you need standardized ways to synchronize the existing systems and to synchronize the chains as they grow in amount and fragmentation. So that's what we have a lot of experience with. One of the main challenges that we found in working on that, different from doing it in the DeFi community, doing it in the capital markets community, is there's a lot of requirements around compliance. There's a lot of requirements around accounting, books and records, and all these different requirements that a transaction has. So the challenge in the capital markets with interoperability is not just connecting two systems, whether they're an existing system to a chain or whether it's a chain to another chain. It's getting the connection to result in a transaction that meets the books and records requirements, that meets the compliance requirements, and that meets whatever other requirements the regulator or the counterparties may have from the transaction, right? So that's the challenging thing, really, is making the transaction actually happen against all of those, accounting, compliance, identity, regulatory requirements. I'm really thrilled to see events like this. I'm really thrilled about the SEC's new direction and the CFTC's upcoming direction, because that'll simplify that problem. But there will be a period of probably 2 to 5 years where you have to create a kind of hybrid system where the old requirements through the old systems still need to be met, but the new system needs to meet them. So that is kind of the challenging thing for transactions, I would say, in the next 2 to 5 year period, that are interoperable in the senses that I described.
Makes sense. Jackie, and my questions go down the line, but I didn't know the way we were going to sit. So, but do you think that the banking system can actually just to turn this question a little on its head, can the banking system manage the fragmentation of all of these chains that Sergey was alluding to? And how does the technology need to evolve from the digital asset side to be able to be used by banks and traditional financial services firms?
Yeah, well, I'd say in listening to that, it actually sounded like the banking system, and so I laughed in the back of my head as I was listening to this idea of extreme fragmentation, siloing, and the need to actually do compliance. That sounds eerily familiar as someone who owns a bank. But I think today, the banking system is not at all ready for it. Like, you have 2 banks represented here. Like, we're probably one of the biggest infrastructure banks in the US that deals with crypto and stablecoins, and Bank of New York is certainly one of the largest institutions that's like the gold standard for holding reserves and managing the crypto industry. And so you probably have 2 of like 10, I would say. Having said that, there's a bunch of things that banks have to deal with that I think are probably the most likely use cases to hit banks at first. One is wallets, and that's consumer-related wallets. The second is infrastructure. I think on the infrastructure side, you're seeing that evolve today, and that's infrastructure of dealing with BIN sponsorship, moving money, storing money, and kind of the overall management of on-ramps and off-ramps. And I think that infrastructure has actually been established by players and operates quite well within the system today. I know we work with over 150 plus crypto companies, hundreds of accounts, tens of billions of dollars of money that flows through on a fairly regular basis. That happens very fluidly following all the KYC rules that are required and all of the institutional knowledge that we've had for 90 years of developing a banking system in the United States around like core banking law. So that exists today. On the consumer wallet side, I'd say that's probably the least sophisticated, and I don't actually see like a use case today for like stable coins and consumer wallets. No one is sitting there going, I'm gonna use my $25 worth of stable coin at Starbucks. Like that kind of, it's a nice theory, but I don't actually see any transaction volume that's happening on the consumer side. Where you're going to see it, though, is institutions that have moved their infrastructure, and over time, it'll become more prevalent as banks adopt stablecoin wallets, most likely through their core providers like Fiserv, Jack Henry, and FIS, who will enable it so that you could have interoperability between crypto companies, fintech companies, and core financial services. And so those wallets will be onboarded probably within the next year or two by these companies who have been watching Genius Act. But those are the two more likely use cases for where it happens. And I think on the stablecoin infrastructure side, you won't really notice it as a consumer. It'll just happen in your payment devices. And those rails will start to get moved first by multinational payments and then second through more domestic payments, largely because the infrastructure has started to move over those rails if, and I say if, there's an advantage in terms of actual cost and speed versus theoretical cost and speed, because we also are having this intersection of FedNow, which is a 24/7, 365 payment rail that actually works today. And so users could send a significant amount of money. Adoption isn't that great, but that actually does exist. And so big institutional users are going to debate which rail is actually more economically advantage in which to send money.
Yeah. Michael, I want to get to custody and wallet infrastructure in a second, but because of how Sergey teed things off, Jennifer, I'm actually going to ask you, so what liability, counterparty, and settlement finality issues emerge when you're bridging these open smart contract systems that DeFi is built on with these regulated banking systems? No, for you. Michael's coming in a second.
Sorry, I thought you said both of us.
No.
Yeah, I mean, I think that's a very interesting question, right? Because you have the question of, an auditable chain and figuring out, and as you mentioned, Sergey, all of the data has to travel with that. So you have the question of finality, and you have the question of revocability, right? And so on chain, things are final, but there also probably needs to be a revocable process, just like you have today with wires and other payment systems. So I think it's a really interesting question of, is it final on chain, but what is the process to really have it be revocable if needed off chain and through the regulatory environment?
Oh, that's very interesting, because I mean, the whole point is for it not to be
Right.
revocable in many ways, although certain, obviously, stablecoin issuers are, I think, thinking about revocability. Okay, so to move to a different part of the infrastructure, but that is just as equally important, as you said, Fireblocks builds wallet infrastructure. And Michael, talk about how the custody broker approach today in traditional financial services contrasts with wallet infrastructure and sort of other digital asset technology, just to set the stage, and then I, of course, have a number of questions.
Yeah, so I think that first of all, when people think about custody, I think what they have in mind is either how banks used to have safes and they would basically store bare assets in those safes, or maybe like, the entire books and records, right, that currently exists in terms of some kind of like, tree that at the top level you have something like DTCC, and then kind of propagates to the various intermediaries that are creating a hierarchy of sub-accounts. The reality is that actually that function in blockchain and crypto is actually provided by the blockchains themselves, by the L1s. They're the ones that are, that's kind of the books and records. And what you do as a custodian or as a wallet provider, or basically the safekeeping element, is actually storing the password, right? Storing the private key that is the instruction to move either an asset from one wallet to another or operate a smart contract on behalf of that account. So conceptually, it's a bit different. On top of it, unlike, I would say, like, in the traditional space that, okay, there is basically one safe, right? You can actually operate much more sophisticated and improved mechanisms to increase the security, right? So instead of having, for example, one private key, one of the things that Fireblocks and a few other folks have built over the last couple of years is this concept of multi-signature or threshold signatures or multi-party computation, but essentially It's a virtual system that distributes the ownership over a wallet, right? So you need multiple parties to actually sign a transaction simultaneously to instruct the movement. And that creates like a much larger or much greater resiliency, right? From both a cybersecurity standpoint, counterparty risk standpoint, operational risk standpoint, compared to modes that you have in the traditional space. So that's kind of one important element that it's quite interesting to bring. I mean, it's actually nowadays when you look at all the crypto and fintech players, they all have adopted it. Also, in terms of most of the retail wallets, they've adopted it, and also I think the banks that have partnered with us, they have also adopted it. But generally speaking, every time that we do talk with bank, especially like, you know, bank IT, it is a fairly complex journey to get them think about how they can enhance their resiliency in that regard. By the way, you know, that type of technology actually proven itself to, over the last couple of years, to prevent quite a lot of disastrous situations in terms of theft in the crypto space. And I think that part of what we are working on right now is the regulators globally, and I think the more exciting thing is that we now have the opportunity to work with the regulators in the United States, is to actually bring frameworks, right, similar to what you have in Europe, like DORA, to bring similar frameworks into the US that will help regulators and traditional financial institutions with scoping and understanding how to implement those models, and make sure that as we build or embed those capabilities within the traditional space, we are doing it in a secure and safe way, because it's true, I think, like, you know, Jackie and kind of alluded to that, there is sort of a hump, right, that, and that's also been our experience working with some of our partners over here, is that there is actually a pretty significant effort that goes not actually in implementing the wallet infrastructure and the custody technology per se, but actually integrating it into the traditional systems. And it's not only integrating in the traditional systems, like just connecting those APIs, it's actually also to evolve the processes and the procedures and how IT is actually going to consume that within the bank. And the reality is, probably won't be surprised, right, that most of the banks, whether they develop their core banking systems internally or they're using providers like the providers that were mentioned over here, those providers and those systems that were built in the 70s, 80s, and the 90s, they're not really equipped to deal with it, not only on the level of you know, the fact that they're doing batch processing once a day, but actually even change management that sometimes expected to take weeks or months, right? You now have a situation that there is a fork on the Ethereum blockchain, and you need to update all your nodes to the fork, right? And you need to do it in the next 60 minutes. And if you're not going to do it in the next 60 minutes, you're going to be disconnected from the main ledger, right? So those processes, those IT processes, they also need to be evolved within those financial institutions to actually deal with this technology.
I was going to ask you as a follow-up, what current banking practices need to evolve to be able to, but you already answered it. So, so Jennifer, we'll go down the line from you, but what's the biggest technological obstacle in having traditional financial services or banking firms plug into DeFi itself today? So applications like Uniswap, which allows for permissionless swapping of assets, or Aave, which allows for lending type activity. And then if you can each say what you're doing from your particular vantage point to try to move past these technological obstacles, that would be great.
Sure. I think the reality is you have to have expertise in both traditional systems as well as digital asset systems to understand how to integrate them and how they can best work together. So I'll start with some of the work that we're doing on the traditional systems. We were one of the leaders with real-time payments. We were actually the first bank to send a payment. When the credit limit increased, we were the first bank to send a payment there. We were one of the first banks on FedNow. The power of immediate payments is so important in this economy, and we continue to work with our clients, and the 9,000-ish banks. Jackie, you mentioned adoption. We still have more work to do, right? And so, getting those consumers and those communities access to immediate payments is a really first important step. Second is being able to move dollars 24/7. That is a big use case, particularly from our bank and our corporate clients who want to be inside the walls of BNY, able to settle dollars 24/7. So that's a really, and by the way, not a lot of banks can do that, which is why the digital asset structure really can potentially leapfrog some of the bank legacy infrastructure, but we've done both to make sure that we're ready. And the third is, AI, and we are heavy users of AI, particularly in the payment space, whether it's payment efficiencies and the operations, whether anomaly detection, fraud control. AI is going to really help us get more efficient and provide safer and faster payments. But then also across the industry broadly, ISO 20022 is really important because as we've talked about today, it's about setting standards. And that's why ISO is so important, and we've leaned in so heavily. We've tested with clients, we've worked with Swift, we do a lot of speaking on it. So it's really important to continue to control and really go out into the market and think about standards. And then, there's lots of folks in the industry thinking about it. I know CHIPS and Fed are also exploring, expanded settlement windows. So all of these things work together to make the traditional infrastructure more efficient. Okay, so, but there's still gaps, right? There's 90 plus immediate payment systems around the world. There's hundreds and hundreds of clearing systems around the world. We see that illustrated sometimes in cross-border payments with the different formatting. So there are still some efficiency that the digital asset ecosystem can really help us solve. And, if you think about, you mentioned digital asset custody, we launched that several years ago. We are heavily researching and working on both. And so we launched digital asset custody, and we have already integrated the traditional and the digital asset rails together in one application. So expand that to then stablecoin and some of the on and off ramps that you have between fiat and digital asset. We do that today for many clients and many of you in the room. And we work very, very closely with many digital asset providers, just even providing traditional banking services. So I think that's a really important part of learning that as well. But the interesting thing about BNY is, we touch about 20% of the world's investable assets. We clear $2.5 trillion of payments every day. So we have an obligation and an opportunity to really work together across the industry to continue to really set these standards. And whether that's through, Agora or Swift or Guardian and all the other projects that are going on, we're doing both of these things in parallel because ultimately they have to be able to work together.
Michael, how are you bridging the biggest technological gap between bringing DeFi and TradFi together?
Yeah, so Rebecca, I think that we've started at 2021 when we did Aave Arc together, when you were at Aave, and I think that at the end of the day, the journey that we started back then. So Aave Arc was, I would say, the first project around DeFi back in 2021 that was really catered into the institutional client. And what we identified at that point in time is that for any intermediary that basically has some license obligations, whether money transmission, trust, banking, the compliance element and then the permissionless nature of DeFi were not really resolved, right? And we created basically a permission level on top of permissionless DeFi that solved that. Now, kind of fast forward to today, we have a bunch of projects in flight that are integrating DeFi and also providing the compliance layer for DeFi, targeting the institutional market. I would say that the main appetite right now over there is coming from the large fintechs, like the names that were mentioned here before, that they are, whether it's like the Stripes, the Revoluts of the world, etc., that they're already digital ready. They already have wallets, they already have like sizable amount of users in the tens of millions of users that own crypto assets and specifically stablecoins, and they want to figure out how do they now leveraging Aave, Morpho, Uniswap, all those things to basically give their clients better, more robust access to those markets. The way that we do it is basically twofold. The first one is really creating adapters and infrastructure for them that allows them to interact with those markets through a secure API. So something that we didn't talk about over here is actually the security element of accessing DeFi. Some of the questions over there is like, how do you know that you are accessing the right DeFi smart contract? How do you know that you're sending the right transaction? How do you have the right permission level and all the approvals that are needed to send a transaction? So we basically solve all that for them. We call it a native DeFi solution, so it gives them all the security that we were able to figure out for them for their CeFi interactions. And the second element is, which is actually still in the works, and I think that this is where a lot of collaboration is happening right now with the regulators, is really solidifying the approach around the compliance and kind of how do we KYC and how do we making sure that there is no illicit financial activity within those protocols, which is basically, if I'm now doing a swap on Uniswap, how do I know that the other guy, that the counterparty on the other side is not from North Korea, right, or some kind of OFAC sanctioned entity that if I own MTLs, e-money license, trust, that will be a huge issue. So so for that, there are a few approaches. There are some of the traditional approaches that we've taken, like whitelisting. And now we actually have a team that is working on kind of the next iteration of that is using on-chain identity. And we think that on-chain identity, that is just like, a much broader component within the regulatory landscape that is now being looked at across pretty much like every regulator globally, bounded into that utility is going to actually unlock this for both retail, institutional, and probably will solve that in the most elegant and technologically native way.
Yeah. One quick anecdote before I turn it over to you, just about Aave Arc, which is from a compliance perspective, back 5 years ago now, we used one of the blockchain analytics companies to do an analysis of the smart contract pool of all the assets that were in the pool and to see what the connection was to any wallets that were associated with illicit finance. It was very, very low, and so we were able to sort of put that out there. And I just went back to the same blockchain analytics company maybe a month ago to ask about it, and the guy that I know there very well said, you were the only people to ask for something like this 5 years ago, and now all we get is banks asking for the same type of analyses. So, everything old is new again, and Aave Arc was a bit before its time. But Jackie, tell us about technological.
It's great. I don't think that there is technology as holding people back today. I think it's knowledge and ability to execute around building. And so on the knowledge side, I'd say core teams of financial services are not geared to have the insight and judgment to understand what's being built on a blockchain and how the products work. And so it's hard to both regulate or oversee something as a financial institution when you truly don't understand it. And so the knowledge gap, I'd say, is pretty extreme. And we've been doing crypto for years, and I think one of the things our regulators felt comfortable with is that we understood the products that were on our rails. And so when people were claiming they were being debanked, you could come to Lead Bank, and we were able to work with you because we actually understood the products and had the confidence of the FDIC and the Fed. I'd say the second issue around ability to execute, Michael made the reference about the velocity of the way things are being built and executed on chain. You have to be able to build and execute with engineers that can work in real time and have very quick sprint cycles in order to be able to operate in this dynamic environment. And I'd say a lot of financial institutions don't have that, and scale doesn't matter. Sometimes you can do more with 5 engineers than you can 10,000. And so it's more an issue of how do companies run in financial services where you have 50% of the market cap plus being 50 years older and more. And so a lot of these companies are going to have to reorient around velocity. And so the only real technical issue I've seen in the last few years is that around 24/7, 365, which Jennifer referenced. But having said that, you could adjust around that so that you could manage it and be able to execute within an institution so that you actually could send and release within an institution 24/7, 365. And so that's existed. It's just something that an institution had to build against until you were actually able to use Fed windows that are 24/7, 365, which you can today. And I also think now most companies are quite comfortable with the windows that exist. It's not optimal. So I'd say like that would be the one tweak I would make to make sure that the liquidity is able to be managed and all the counterparties are able to be managed across a dynamic perspective of what 24/7 looks like. You don't have consistency in all the counterparties that exist today. And I'd say companies like Intrafi as an example, or the institutions that federate bank deposits, or even on the flip side, core providers, which aren't 24/7 oriented in their mindset of how they do things. And so, my summary would be there isn't a technological problem today. It's a capability, not a technology.
I love that. Sergey.
Yeah, sure. So I heavily echo what Michael described. We are in similar situations with a lot of users. And I think there is a big hurdle to clear there in the traditional institutional world of integrating their existing systems with the chains. I think there's really three problems to solve. There's that first problem of the correct integration of the existing systems for books and records purposes, compliance purposes, key management purposes, all these different purposes with the chain, so that the large existing tech investment that was made by there's all these jokes about how banks still run on COBOL. Yeah, that's true. They're still going to run on all this stuff. So you have to make all of that compatible, and you have to make it compatible in an open standard. So you have to make it compatible in a way where, to Jackie's point, you can get 5 engineers to do it successfully themselves. Then the next problem really is, how does the transaction actually work? So, okay, I've synchronized my internal books and records requirements, systems, accounting system, whatever system, and now I have to do a transaction. How's that transaction going to work? How does that operate? What information does it carry along? What does it prove to regulators, and so on? And then the final point where we started mentioning Aave, the new version of ARC is Aave Horizon, which Chainlink is actually the main technology provider for, powering it for cross-chain compliance and a whole bunch of other things. That's where you have a model similar to what you have in banking, where the destination is responsible for making sure that things are a certain way, for making sure that they're not dealing with certain parties, that the liquidity pools work in a certain way. So then the third problem is, how do you get this DeFi community that historically has been completely disconnected from any regulatory anything to meet regulatory standards? And the answer to that is smart contracts, right? So you write smart contracts which automate compliance. You write smart contracts that automate the proving of things to the counterparty as well as to the regulator, as well as to the DeFi team. And so that third problem requires a set of on-chain smart contract standards for compliance, for cross-chain connectivity, and for data into that cross-chain and compliance set of contracts. And then all of that will have to work together, where you'll have to have the existing systems properly synchronized with chains to meet their requirements. You'll have to have the transaction that goes across chains to be properly formed and convey the right information to the receiving chain, and to store the right information in all kinds of places that regulators and counterparties need to look to be sure that their transaction is correct and reliable. And then you need the destination of the transaction, in this case, the DeFi protocols, to have what's called regulated DeFi variant. So the reason you have like Aave and Aave Horizon is because you're not going to make Aave work this way. You need to make a separate version. And so all the DeFi folks need to make these separate parallel versions that are able to interact with all this regulated capital. That's called regulated DeFi. Seems to be that's what we're discussing here, which is kind of amazing. A year ago, I wouldn't have imagined. If you told me a year ago you're going to be at the Fed discussing regulated DeFi, I'd be right, Michael? Yeah. It's a crazy idea, isn't it?
No, I remember what we discussed 2 years ago, a year ago, yeah.
A year ago, right? 2 years ago, maybe, who knows? But sorry, it's a good thing. It's my way of saying it's a good thing. Thank you. So you have to get all three of those things to work. You have to get all three of them to happen. And then it'll all be lots of fun and a blast. And DeFi gets you 8% to 15% on the US dollar. So I can almost guarantee you that when you open the floodgates for people to get that type of yield on the US dollar in a compliant, regulated way, I mean, the yield will go down, but it'll still be high. It'll still be very high.
It's good. It's good that I'm a moderator, not a panelist, because I'm not sure I believe that there should be parallel DeFi systems, but we can talk about that off stage. Because I also think, to your point, it will take away a lot of the benefits of DeFi, including the yield and things like that. I think there are other both technological and compliance solutions we can be thinking about and putting into place. But before we move on to the concept of stablecoins and tokenized deposits, which are actually critically important in DeFi, in all good symbiotic relationships, people give a little bit. It's rarely 50-50. And so the question I have for everybody, and this is just like a quick, which is, does DeFi need to come 90 and TradFi comes 10? What's the give and take that we expect to see? Jackie, do you want to?
I'll start. We've worked with a lot of digital asset companies for a few years, and I'd say the one thing that has evolved but still needs more sophistication around it is that willingness to actually follow US banking law. And so, like a lot of companies that were debanked, there's different qualities of what they were willing to do. Some of them were just young and they worked with a bank that had no financial experience, and so they decided to pull back from the digital asset space. Like, that's legit if you don't have the team that's able to do it. But there are a lot of companies that are young and developing that if you actually had to go through the filings that are legally required as a US bank, they are somewhere on one end of the spectrum, which is grossly negligent, or on the other end of the spectrum, just unsophisticated and evolving. And that's not everybody. It's just a group of companies that are just young, developing, trying to grow as fast as possible. And they're just less willing to do what needs to be done in order to operate within the system. And so I have seen an evolution in the last few years where there was this incredible libertarian perspective about how people were going to operate in the DeFi world. And that has evolved, thankfully, where people have understood, and it was probably with the failures around Signature and Silvergate, that crypto companies actually said, like, oh my God, we're like reliant on the banking system. Like, our money markets are relying, our liquidity flows are reliant.
Guys, unfortunately, I do have to go now.
I think they make incredible strides, and there are some amazing companies in the space that are rock stars in compliance and everything they're supposed to do. But when you are largely receptive, not everyone is.
All right. Can you guys see me again? Yeah, there we go. So, unfortunately, I do have to go for today. It was a great one in the stream. Honestly, nothing much that special, important has been getting discussed. Like I've said, I do think it will just be longer term developments, not for the shorter term price action right now. Anyways, one thing that I would like to say is that my friend, Crypto Goos, he will still be live streaming, and it would be great to check him out. He is still live, and he will also be giving you some updates, some remarks about what has been happening. So make sure to go to Crypto Goos and watch his live stream. And yeah, there you can be getting some more extra alpha. On top of that, of course, keep in mind to follow me over on X. whenever there's new updates, you can go over my X profile and you can find the new updates over there. And of course, join the Platinum group, and then you'll be staying up to date. Anyways, was great having you all guys over here. And guys, I'll see you